Hey guys, David Robinson here. Welcome to the apartment investing journey. We've got another great guest for you today that has a significant amount of experience and has really scaled a phenomenal business in the last roughly half decade here. And it's been very impressive to see what he's done. And I'm excited to get into his story. But I want to welcome Ivan Barratt to the show. Ivan, thank you for coming on and spending some time with us.
David, happy to be here. You are most welcome. I've been looking forward to being on your show. Happy Tuesday, man.
That's right. Middle of the week here, just grinding away. Well, look, Ivan is a 20-year veteran of the real estate industry and currently serves as founder and CEO of the BAM companies. Ivan is a multifamily owner, fund manager, and syndicator who specializes in large apartment communities in the Midwest. Since 2015, he has raised close to 200 million in equity, acquired well over 5,000 units, and grown the BAM companies, which includes BAM Capital, BAM Management, and BAM Construction, to a best-in-class four-time Inc. 5000 private equity and management firm. So, Ivan, that summary condenses about 20 years of your life into three sentences, but we want to get the whole journey. And so if you can, let's back up and let's talk a little bit about sort of the background, where you got started, and then let's dive into how you've been able to scale your business to what it is today.
Yeah, that sounds like a plan to me, David. So, always had aspirations and dreams of being an entrepreneur in the real estate space. Got out of college in the early 2000s. Got my foot in the door with my first mentor by telling him I was there to work, to learn, not to earn. So he said, "Well, if I don't have to pay you, we'll find something for you to do around here." And very lucky to experience a lot of different facets of real estate, working for a boutique real estate developer. 2008 hits. I am hundreds of thousands of dollars in debt, learning very good lessons on how not to practice real estate. And that's when I wrapped up things with my mentor and started a property management company from scratch in 2010, doing everything myself in the beginning and then scaling that company. And in 2015, found what would eventually be the COO and partner that I have today. And together, we scaled a syndication business. And a couple of years ago, we parlayed that syndication business into a financial services model. Today, we are closing Fund 2 at 75 million and opening up Fund 3, which will be in excess of 100 million in equity. We've raised all that from private investors, private capital, accredited investors of all shapes and sizes. And we're in some ways we're just getting started, but it's been a heck of a ride so far.
Well, thank you for giving that brief summary. Usually we, start and go into more depth about sort of the backstory of a guest. And for the sake of time, because you have so much experience, and you got started in 2015 in the space, I'd like to maybe start there and talk
Sure.
about, when you maybe just a little bit on the touch of why you decided to go into syndication and maybe that transition from the property management company and then building up the syndication business. And then let's talk about scaling this thing to over 5,000 units. So let's start there.
Yeah. So for me, the property management company was the bridge to syndication. It was my path to being able to build out a management team because I learned at a very early age as an investor that the real value is added, the real journey starts after you close on the asset, right? Lots of people can find a good to great deal, but to really maximize value, you need to be able to execute. And so syndication for me was, I would say, a very logical path because I saw early on the value in large scale real estate assets. I learned early on about forced appreciation, as you know, you and I know very well. When you raise the rent on a few duplexes or fourplexes, which I had in the beginning, yes, their value goes up. When you do it 50, 100, $150 on 250 to 300 units, the zeros get a lot more fun for everyone involved. And so it just made perfect sense to me. Why wouldn't investors want to partner with a management team that's in the industry, in the business 24/7, pool those resources together, and operate something at a much greater scale where, if done well, provides typically returns that are substantially more than you would be able to do on your own as a small part-time landlord.
And I'm curious. So the property management business started in 2010. You
Yeah.
grew that through 2015 and ongoing. But when you got into syndication, had you started to manage large commercial assets at that point in time? Maybe briefly describe
No,
sort of
no,
what that
actually,
property management business looked like at that point.
oh yeah, yeah. I was managing anything I could get my hands on. Duplexes at that time, a lot of assets that were owned by landlords by necessity, meaning it was 2010, 11, 12. They couldn't sell. They were underwater in equity, so they had to rent. Lots of out of town investors that eventually became equity partners of mine was some of my early investors, and we had a few smaller apartment buildings.
Mm.
My philosophy was start small, fail fast, fail small, right? Learn from those mistakes. And that way, by the time I grabbed my first syndication, I had a couple, less than a dozen investors. It was a 60 unit project, and I already had some management expertise. It was a logical next step for my management team to take on. So I had much more confidence in our ability to execute the value add strategy, the day to day management, and it gave the investors the confidence to also bet on me, and at that time a very small team. And then from there, the goal has just been to keep finding really great people that buy into my goal as a business owner, as a founder, which is to grow a really great company, right? That just happens to have its business model as being syndication and fund management now.
I'm curious, as I sort of view the landscape of the syndication world,
Yeah,
um, you have a lot of well-established companies that have scaled, it seems, in high growth markets. Uh, Southeast Texas, even some in the Rocky Mountain region.
sure.
But Midwest, and maybe this is my own perspective, and I've been, part of my business model is really looking for incredible operators to potentially partner with. There's not as many in the Midwest that have really scaled and stayed focused on the Midwest. Tell me
Yeah.
a little bit about that for you. And is that true? Do you see that being the case? And how have you been able to do it where others have struggled?
Oh, I would say there's just as much competition here as there is anywhere. I feel a little bit lucky to have seen the trend and got in front of the trend long before the amount of competition has come into the market. You know, you'll see a lot of books behind me, and there's on my shelf there's like only one real estate book that's turned forward. I don't even know if it's visible to you. Out there it is, right there.
Mm-hmm.
The rest of those books are the ones that are facing forward have influenced me the most in areas of entrepreneurship, success, economics, and investing. At my heart, David, I'm a value investor. And that plays really well here in the Midwest. It's the tortoise versus the hare theory. There's a lot of Midwest markets that have successfully decoupled from the old Rust Belt moniker of the past. And they've got really great growth prospects, 2, 3, 4, 5% a year in population, job, and rent growth, right? And like a Texas or a Florida or some other areas, Phoenix, for example, the Midwest is not a boom market, but it's not a bust market either. And so, coming out of the great financial crisis, my first goal in this whole venture was to manage risk, manage it with debt, manage it with property management, and figuring that out first. And how do we protect ourselves from black swan events in the future? How do we protect ourselves from the next 2008 or other corrections? And then how do we add value? How do we get yield? Right? How do we increase the value of the assets? Um, for right or wrong, the GFC forever changed my DNA as a investor and as an operator. And coincidentally or not, being Midwest born and raised was a huge advantage to me.
Yeah. Love that perspective. Um, let's talk a little bit about scaling since 2015 when you bought that first apartment building.
Yeah,
What has this process looked like for you, and any insights that you might be able to share with our listeners that could be helpful to them as they work to scale as well?
yeah. There's a book. I'll keep pointing to these right here. Traction. That's easily one of the top books that have influenced my company in the last 5 years. We are going into our fourth year of using EOS. It's not for everybody, but when you get to the point where your leadership team is working as hard as they can, and there's no more bandwidth, right? They can't work any harder. I had to find something new as the CEO. I had to bring in a system that would allow us to scale and have folks start to develop leadership teams below them, right? Because, like I said, you get to a point where working harder just is not sustainable anymore. The biggest things for us in scale, really, it so much of it comes down to people, and there's no secret success to it. It's actually pretty simple, but it's just really hard to execute. So it's not necessarily easy, David, but it is pretty simple. A lot of it boils down to finding great people, and then it's my job to get out of their freaking way a lot of the times. Give them the tools, give them the latitude to make mistakes, to learn from their mistakes, right? And that's how you amplify and scale and grow a real business, is by focusing on those people. And I'm pretty fortunate to have found early on a great partner and some great key hires that believed in my vision of first having a property management culture where people actually are banging on the door to work there, which is very different for our business. It's typically a high turnover, not a great place to work a lot of times. So building out a great culture, and then with the syndication business, the fund management at BAM Capital, you know, we are a financial services firm. That company is charged with stewarding now, as you mentioned, about 200 million in investor equity. That's a lot of capital to these families and individuals that choose to be with us. So growing a team there that was bought into being stewards, right? Being putting the investor first. And you get these little things that are, like I said, simple but not always easy to execute. But if you pull them off, this beautiful thing happens. I wake up every day and get to watch a company now grow, make decisions, and figure things out on its own, with still quite a bit of guidance from me. But I feel like I've almost got a teenager, going off to college. It's my my
That's a
my
good.
fourth child, right? And it's truly becoming its own organism with its own ability to operate and succeed, whether I'm still on this planet or not. So to have to leave that legacy of something bigger than me, something that will carry on, even if I get run over by a truck, is deeply fulfilling.
Yeah, I bet. You mentioned when you found your partner that was sort of a critical juncture in your journey here.
Yeah.
Um, Talk to us a little bit about maybe your own experience in finding a partner. There's a lot of our listeners that are at that stage where they, excuse me, they recognize the limitations of their own skill set and are looking for partners. Maybe shed some light for us on how you found your partner, and maybe some advice or guidance you might have for someone who's looking to find a partner to build a business with.
Well, I'll reinforce with you that finding partners, find key hires, but most people in this world are not unicorn who can do everything. Like an Elon Musk, maybe, right? Warren Buffett has Charlie Munger. Um, you look past the face of most of these large companies. There's me, there's the face, there's a visionary, but there's also someone else that's maybe at the top sharing that place. Um, Gosh, we could spend a whole podcast on partnerships.
Sure.
I can say they're incredibly important. Me as an entrepreneur, I have to recognize that there's a lot of things that I'm not good at or shouldn't be doing, and my partner is the peanut butter to my jelly sandwich, the yin to my yang, a much more skilled operator, a much better manager of human capital, and his ability to execute and his DNA far surpass mine in many critical parts of the business. Having him allows me to focus on the bigger vision. Where is the ship heading? Where do we want to get to? How are we going to get there from a strategy perspective? Who are the people we need to hire? Right? What's the mission? What's the vision for the company? Who are the investors that we need to bring along? It allows me to do what I do really, really well. And the more as an entrepreneur you can focus on building out a team, the better. So for many years, most and still today, a lot of capital goes back into reinvesting in the company to continue that growth in the human capital corridor. And plus, when you get to a certain size, you want to keep your key hires around with some ownership or some profits, interest, and those sorts of things. That's how you find and keep great people.
If you were to go back to that time when you and your partner actually came together, had you known each other for a long time before you decided to partner? Had
Yeah.
you sort of fostered that relationship over time, or was it sort of, happenstance that you connected? What did that look like for you?
Well, a couple of things that were key markers that I found a great potential partnership were he was a multifamily broker for Cushman Wakefield.
Hmm.
I had met him through touring properties and talking to him about the market from time to time. Um, it was immediately obvious that on his two-person team, he was the brains, and the other person was the looks. And he came to me and was looking to get on the ownership side. His dad grew and started a very big real estate company. He wanted to do the same thing on his own, cut his own path. But because he was a broker, he wasn't looking for a big salary out of the gate. He wasn't looking for a safety net. He had saved cash and was ready to take some risk. And so he just came in and we partnered on an 89 unit asset, which was my third syndication, his first. And it went so well, and I continued to give him more and more responsibility of things that I could see that he could do better than me, and that blossomed into him buying into the main company. Him and I be formalizing our partnership agreement, and we've been partners on everything that we've done since.
Love it. Yeah, that's it's sort of a natural progression, where two people out there hustling, carving their own path, naturally work together because it makes sense in the moment, and progresses naturally into something more than just a one-off deal.
Well, and I would really drive home to you and your audience that when you're looking for partners, it's key to find people that are not like you.
Hmm.
I've made that mistake plenty of times. I tend to hire people that I really, really like, and that's bad if I'm hiring them to do something other than what I typically do. So I'm good at hiring a few specific skill sets within the team, and in other areas, I have no business finding the right person for the job.
Yeah. Let's maybe pivot a little bit and let's talk about your growth on the BAM Capital side of things. You have two funds. I think you
Yeah.
mentioned one at 75 million, the other over 100 million or 100
Fund
million.
one was 50.
Okay.
Fund two that we just closed was 75, and then we
Okay.
are getting ready to open fund three, which will be roughly 1,600 apartments across 7 assets here in the Midwest. And that'll end up being somewhere probably around 100 million of equity to buy those assets, depending on where the leverage ends up. But right now, we like a little bit less leverage than at other times.
Yeah, makes sense. And so, those are significant raises for these funds.
Yeah,
Um, the easy answer to that is you've built an incredible company that has a great reputation and it naturally attracts capital.
go
Outside of
on.
out outside of that answer, is there anything strategically that you and your team have developed or implemented that has helped with your ability to raise that amount of equity?
Yeah, we're going to get back to more simple things that just aren't easy to pull off. I did a lot of it in the beginning myself, really learning the ropes with some administrative support. Then I started building out a team that bought into my vision. Some of the things that have really helped us, David, is focusing on continual improvement, asking key investors, how can we do better? Very lucky to have some extremely smart investors early on that would hit me in the freaking gut with feedback.
Hmm.
And after I got over the initial impact, and or maybe even a little bit of shock, I thought, well, wait, well, hold on, guys, let's look at this another perspective here. This is tens of thousands of dollars of paid consulting for free,
Hmm.
and we built this thing almost one investor at a time in a lot of ways. And this magic thing starts to happen. It doesn't happen overnight, but it happens under momentum. It's why Good to Great's behind me here and turning the flywheel. In the beginning, that flywheel takes a lot to turn it. But once it gets going, you really start to see momentum under its own weight. This magic thing happens when you take investor capital and you communicate well, you deliver, right? You're open when things aren't going to plan and you've got to switch plans, and you perform. That capital will come back again and again, and they'll also refer you new capital. So today we've got over 600 investors. I think we'll probably be closer to 1,000 by the end of 22. That's really started to accelerate in the last couple of years. Our number one and two areas where we get the most investment from is repeat investors and the referrals that those investors make on our behalf.
Love that. And you mentioned asking key investors for feedback and how some of those were,
Oh yeah.
maybe a gut punch or maybe a
Some
blow
of
to
it I
the
didn't
ego
ask. I
or
just got it.
oh, gotcha. All right. But was there anything that you can remember? And granted, I'm asking you to go back over, a period of 7 years now. But is there anything that you remember that was substantial when you were growing that these investors said, "Hey, you know what? This is what I would like to see, or this is what you need to change." Anything
Yeah.
significant that stands out to you?
Yeah. I mean, the theme here, David, really is I encourage my team a lot to remember that we are not a small business. We are a big company that today happens to be small. And I said this from day one, and I still say it, right? So what are big, well-established companies that are leading the field doing? And how do we continually get closer to that, right? And it you can't snap your fingers and make your team do it overnight, but you can focus quarterly, weekly, daily on what are these little incremental things that we can do better. So it's my job as the CEO, founder, and visionary, right? To continually be out there in the marketplace going, how do we improve our practices? So in the beginning, it was getting a lot of feedback and figuring out how to make our reporting better, how to make our platform better, how best to communicate, right? The cadence of emails, all sorts of things on a lot of transparent communication. Nowadays, a lot of deals don't cash flow to the pref out of the gate, right? They're waiting, hoping that you're going to execute, catch them up to a pref, and still hit that that all important maybe mid-teens IRR in the end. So you've got to find ways to let them know what's going on and what the value of their investment is today, even though they're not seeing any cash flow. So studying these other financial firms and what makes the great ones great is how we've been able to do that. And I can't stress enough to folks that are out there trying to pull this off. If you look too far down the road, you're going to get overwhelmed perhaps on really what it takes to get from where you're at today to where you want to be. It's so much more about, okay, what's the next most important step? I think I'm stealing that from Brandon Turner on Bigger Pockets. Is the most recent person I heard say it, but it's been said over and over again by experts out there in many different fields, agnostic of real estate.
Yeah.
All kinds of industries, right? What's the most important next step? What's the little bite of the elephant I can take today to improve my product, my service, my operation?
Yeah. So, you're based out of the Midwest and you're focused on investing in the Midwest. Have you done any deals or acquired any assets outside of, generally the Midwest?
The Midwest for us now stretches from Iowa to Ohio. So my definition of the Midwest is pretty wide geographically.
Sure. Mm-hmm.
And right now, by focusing on these markets, I've been able to achieve an average exit IRR. I think don't hold me to this, but we're somewhere in the high 20s, low 30s average exit. And we've exited now, 5 deals, I think, 5 assets.
Yeah.
So I'm able to find tremendous value here, where in other markets that are hotter, where you're seeing global money hit the coast and coastal money hit Texas, hit the Southeast. Florida's white hot on fire, right? Those may seem sexier, but those IRRs are far lower than what we are able to find in the Midwest. And now, don't go telling everybody, because I still got to get a few more deals put together. So we'll just keep that between you and me.
Yeah. Well, my next question was going to be, do you ever feel pressure to broaden the geographic focus even further into some of those, the Floridas, the Texas, the Southeast, Arizona, those markets?
Yeah.
Do you ever feel pressure to go there?
No. Do I want to go there? Yes. Will I eventually go there? Absolutely. That'll be more of a partnership type thing with operators that are boots on the ground that know how to find value in their own market. What I think Sam Zell, if you know that name, said it best. I mean, arguably one of the best real estate minds on the planet, right? He's been quoted as saying, "I'm not a market guy, I'm a deal guy," right? Mm-hmm. And so I go where I know I can find the deals. Now, one day, through partnerships, I may or may not be able to find deals in Texas and the Southeast, and I think you're in Utah, right?
Correct. Yep.
Yeah, love that area of the country. But it's more about the deal first, right? I've got to have certain market parameters and characteristics that are growing in population and jobs and political climates, a little more red than blue, a little more landlord friendly, I think is probably a better way to put that. But I'm really at the heart of it, a deal guy, right? I get the question all the time, like, why aren't you sitting on the sidelines? Real estate's so hot. Everybody's woken up to the fact that we should all have a big slug of our portfolios allocated to apartments. Well, there's opportunities in every market. They're not always easy to find, but there are opportunities in I would say every cycle, every part of the market cycle would be better way to put that.
Yeah. Well, Ivan, this has been a great conversation. I appreciate you letting me sort of bounce around here and just sort of pick your brain on your own, journey of scaling BAM to what it is today. I want to start winding down here and be respectful of your time, but I've got a few final questions for you. The first one
Fire
that I've
away.
got, the first one I've got for you is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
I mean, the number one thing I'm doing, which is still my number one challenge, is finding the right people to put in the right seats on the bus so we can scale, but do it in a way where we still execute at a high level. That's really tricky. It's a little bit easier now than it used to be with more people on the team, but the number one thing is still getting the right people. And then, one B to that answer would be giving them the right tools so that they can succeed.
What's something that either you personally or your team is doing that you're just absolutely knocking out of the park right now that we could all learn from?
Oh man, we are killing it on returns. Yeah, we are. I don't know. I don't think our average IRR is going to stay in the low 30s or high 20s. We're actually getting it audited by a national accounting firm, so we could say our track record is audited. But I think over time right now, if you like the risk adjusted return of multifamily, being in the high teens, mid to high teens, I think it's still a great place to allocate.
Love it. Last question I've got for you. What's the best way for our listeners to connect with you and your team, learn more about what you have going on, and potentially participate in one of your future funds or deals?
Sure, I'm pretty easy to find. The BAM companies would be the main website, the BAM companies or BAM Capital Group.com. If you Google Ivan Barratt, I've got a lot of education and social media exposure out there. And of course, phone number 317-762-2625. 317-762-2625 goes directly to my executive assistant who works for me and me alone.
Awesome. Well, we'll have that info in the show notes. Ivan, this has been a great conversation. I appreciate you shedding some light on what it's like to scale in 7 years to, over 200 million in equity and 5,000 units. You've given us some great insight, and I appreciate your time, and I look forward to connecting with you again soon.
Thanks a lot, David. Pleasure to be here.